Hello traders and investors, welcome back to the Trend Trader channel. In today's episode, we will be looking at some of the earnings that are coming on the week of July 25th, 2022. We know that there are plenty of interesting companies that are coming out or earnings that are coming out, but I'm interested in Apple because I have an Apple position. So if you're on Twitter, you make sure that you follow Earnings Whisper. They always report companies, US companies. We will be talking about US companies, not JSE companies. So this Twitter handle, it covers those earnings. The name is Earnings Whispers. You can see the Twitter handle of that particular account. So from this, you can already see that they break down the earnings according to the week for the whole week, and also they break it down before US market open or after the market close in the US. So you can easily see which companies will be reporting earnings. And then if you have a position on a specific company, or you have a company that you're interested in, at least it gives you that bit of information so that you can expect something that might happen in that particular company. By that I mean volatility, because whenever the results they come out, then that particular share price that is reporting, or that particular company that is reporting, the share price can be volatile whenever those results are coming out. So we can see on Monday that we can expect some results from different companies there. Previously we had a position on Range Resources. It's an energy stock. We no longer have that position. Of all the companies that will be reporting on Monday, we don't have a position. And then we can see on Tuesday there are a couple of companies that are interesting. We can see Alphabet there, we see Microsoft, we see Coca-Cola, there is also Visa, McDonald's, and a whole lot of other companies. General Electric is also there. So you can just see which companies that you're interested in. Then on Wednesday, we see there's Shopify. Shopify has been hammered since the beginning of year 2022. So hopefully this time they will try to revive themselves based on the result that they will push out. But there's also Meta there. Remember that Meta, they said that they will be slowing down in terms of hiring. So a lot of the tech companies have reported that they will slow down hiring of new people in those respective companies. And then we also see other companies such as Spotify and Waste Management. Previously we had a position on BMS there. This is a pharmaceutical company. The stock is not moving the way that we want it to move, so we exited that position there. There's also Humana, which is a biotech company that we have an interest. It's on our watch list. We don't have a position yet. And then on Thursday, there's some other big companies that are reporting. You can see there's Apple, there's Amazon, there's Pfizer, people's favorite stocks, Roku, but there's also Intel. The United Steel, they were performing better at the first half of the year, when at the beginning of that Ukraine-Russian conflict, but the stock has since started to move sideways. You know, previously we covered MEC. MEC is one of the positions that we still have in our portfolio, and we previously had a position on Altria. Altria is a tobacco manufacturer. If it's similar to British American Tobacco or Philip Morris, but yeah, just that Altria is a tobacco company. This Peabody Energy, it used to perform well at the first half of the year 2022, but then it started to move. It started to have some wild swings. Then we exited our position. Most of the energy positions that we had, we exited them on profit. Some of the companies that were erratic were companies such as consumer staples. At some point they were moving up, then they started to pull back real quick. Then on Friday we still see a couple of energy names such as ExxonMobil, Chevron, and Phillips 66. These are some of the companies that have done well. F.I.R.E is also in the healthcare sector, so it's one of the companies that have done very well in the past. We see another consumer staples there, which is Colgate, Palmolive, and Procter and Gamble. So based on this, we can already see that there will be a lot of companies that will be reporting this coming week, so we can expect a bit of volatility in the market. If you have position on some of these companies, then you can expect some wild swings. For today's video, the company that we're interested in that we'll be covering is going to be Apple, but we can also look at the chart of other stocks such as Amazon and Meta, and then maybe have share our opinion on those companies. But the company that we are most interested in is Apple, because we have a position. One thing that is tricky with US companies, whenever they report their result. This is an example. TrendSpider, it's another Twitter handle that you can follow. There they have insightful information for the US companies. You can see that they say that Verizon, they beat sales, however they missed on earnings. Then when you look at how when they report that, you can already see that the earnings per share, they reported $1.31, then the estimate was $1.32. This is just an insignificant difference there. And also this is an estimate. This is a factual figure based on the company financial statement, but this is an estimate of different analysts. So you can't say that a company, they missed those estimates, even though the number is just so insignificant. Then when you look at the sales, Verizon reported sales of about 33.8 billion, and then they beat the estimate of 33.77 billion. So whenever this happens, the share price can either go up or go down depending on how the company beat or miss the estimate. So whenever we're looking at the chart from a trader's perspective or from technical analysis perspective, we're looking at how the market react on those figures. It wouldn't matter so much to us whether the earnings were a miss or a beat, or whether the sales were a miss or a beat. What matters is that how the general market responds to those results. Let's say, for example, now they report that Verizon, they missed the earnings by just 1 cent. If the share price go up, then we see that as a bullish signal. It doesn't matter that there is that insignificant miss. But if the share price go down, even though the sales, they did beat the estimate there, but the share price go down, that tells us that the market is responding negatively to those results. Then based on how we see the chart from our set up, then we can respond accordingly. Like I said, once again, you can just follow TrendSpider, or you can follow Earnings Whisper, so that you can get that information. And if you're not following us on Twitter, you can see here's our Twitter handle there. You can follow us on Twitter. Okay, I said that today I will just focus on Apple, mostly because I have a position there on Apple. So if you go to the Apple's website, you go to investor relations, you can see now that the results that are coming are for the third quarter of financial year 2022. But since the results are coming on the 28th, so we don't have this result yet. We can only look back at the previous result of quarter 2 of 2022. Then if you click there on financial statement, you should be able to download this previous financial statement that they have there. So in this case, we can see that they have the condensed consolidated statement of operations. There's a lot of things that you can see there. We can see the net sales where they compare quarter on quarter, which was the quarter that ended in March 2022. They compare it with the quarter that ended in March 2021, but they also look at the 6 months period, which is between March 2022 and then March 2021 there. So what we're looking for, we just want to see the recent quarter that the sales or the results are improving. It could be sales, it could be gross margins, it could be earnings, all those kinds of things. So in this condensed sheet, there's nothing that I'm interested in there. What I'm interested in is in the balance sheet. So in the balance sheet, what I want to see, I want to look at the current asset. We can see the total current asset are about 118 million. The results are reported in millions, but this is a decrease from September 2021. The earnings there were 134 million. So now the earnings have decreased to 118 at that period. So now as we continue to scroll through those results, we can see also the liabilities, the current liabilities, they increased from 125 million all the way to about 27 million there. So it's something, it could be worrying, it could something that is not a cause for concern, but something that I'm also interested in is the cash and cash equivalent. When you look at March 2021, we see that they had 39 million cash and cash equivalent. But for March 2022, they had a decrease there of about 3 million. They decreased to about 35 million there. So whenever a company decreases in terms of cash and cash equivalent, it could be something that is a cause for concern, but this is just not the total picture. You need to go through each and every transaction there to see where they will be missing in case they are missing something. But now another thing that I'm interested in is the increase or decrease in cash. As you can see that in that quarter they had about 29 million rand in cash and cash equivalent. Previously they had about 40 million. They still have a positive cash there, so that is something positive to look at. at, especially if you are doing a fundamental analysis. But we can already see that even though some of the things are decreasing a bit, the other metrics, they are still in a better position. For example, if you look at the earnings per share, in the previous quarter, they reported $1.41 in March 2021, and then in March 2022, they reported $1.54. So this is an increase in terms of that year-on-year comparison for those second quarter of the year. So this is something positive, right? Now, when you look at the chart, because that is where we're interested in, that is where we want to look at the trading opportunities. Remember, last week we released an analysis of Apple stock. We said that we are waiting to see how Apple respond when it comes to this level. It is currently trading at $154. We entered at somewhere around $151 per share. Now it is at $154. So what we like to see, we want to see Apple break above this level and then pushing, coming back to this higher level there, somewhere around $180 per share. This will mostly depend on how the results are coming. If Apple come with a positive result and the market love it, then we can expect the share price of Apple to continue to push all the way up there to that next resistance level of about $180 per share. Otherwise, if Apple come with result that the market interprets as negative, then we will see the share price then start to tank, coming back to trade below $151 per share. Then maybe the next potential support level is somewhere around $130 per share. But like we said, we already have a position, so we'll be happy to see the share price pushing further up there. And this is on the weekly time frame, what we see here. When we took the trade using the daily time frame, so it was easy for us to be able to spot the level. We mentioned that this is the level that we are watching there, somewhere around 151. When it broke above that level, that is when we took the trade. Like you can see now, we still have this gap that we have moved so far. Our stop is just below this low there, and then we are targeting this level here. You can see we have a risk reward that is greater than 1:4. So we're still hoping that the result will be positive, and then it can push the price further up. But if the results are negative and then they push the price further low, then we will exit somewhere around $144-145 per share, then with a tiny loss. Every time we take a trade, we always have a stop loss with us, because we cannot predict where the market can go. But at this moment, we expect Apple to come back with a positive result, which will help to push the share price further up there. So that is the main thing that we'll be looking at this week. And if the share price just break above some of these levels, then we can then add more into our existing position, so that we ensure that we have a bigger position. Because at the end of the day, it doesn't matter. You don't want to have a position that is so small that even if it gives you a decent gains, but that does nothing to your investment portfolio. At all times, you need to balance the position size with the potential gains that you can make from that particular company. Then if you go back here on earnings whisper, then we can look at some other companies that we can look at. If we look at Alphabet, to see what is happening with Alphabet, how they reported their result. Let's look at the weekly chart instead of the daily chart. So if you look at Alphabet, we can see that the share price has been on the downward trend. That has been the case with Nasdaq and all the tech stock. So we can see it's been coming low. It came to this level where it finds support. So it's currently been moving sideways since somewhere around March 2022. So now, depending on the result that they are going to release, if they release positive result, we can expect maybe Alphabet to start trading above this level. Remember that they did a share split. The share price was over $2,000 US. Now after the share split, the share price is just somewhere around $108 per share. So with positive result, then we can expect Alphabet to go up. But if Alphabet does not come with positive result, then it's possible that Alphabet can continue to push further low. Remember, Alphabet is Google. They just changed the name. We can speak about how they generate their revenue through ads and all the other things, but whenever we buy companies, we are buying them based on their share price. Yes, we can think about the business and the fundamental aspect of the business, but what we are paying for, we will be paying that share price. So if you buy it at 108 and then it drops to 8, it means that you are losing money. It doesn't matter what Alphabet continue to do on the side. So these are the two levels that we'll be watching. We'll just be watching this level here to see that after the result came out, does the share price drop below this level, or does it come back to 120 and possibly breaking above this 120 level? So this is the trade levels that we'll be watching, but at the moment the share price is in a downward momentum, so we don't have a position on Alphabet. I mentioned that there's Amazon as well. Amazon will also be releasing their result. There are plenty of companies there in the US that have been on the downtrend, either because of that recession that people are talking about. You can see that Amazon, it fell all the way coming back to that previous resistance level there, where it has found support. It has been trying to break above this level as well. Then again, depending on the result, positive result might push the share price above this $125 per share region, and the negative result can bring them back to this floor level of about $100, and then maybe it can break lower. So we are always optimistic. We would like to see positive result. There's no point seeing negative result, as much as we do short stocks from time to time, but it's not like we want to see companies falling. We would like to see companies pushing further up there, but it is beyond our control. We only respond to what the chart tells us. So at the moment, we're just going to see this is the level of interest when it comes to Amazon, where the result it can push the prices at. Okay, so let's see what else is in there. Coca-Cola. Well, Coca-Cola, it's a boring company. There isn't much that we can expect from that company. We mentioned that the consumer staples, they attempted to trade higher there when the whole market was breaking low. When it broke above this level, we took a position, but it just quickly reversed here. You can see this big candle there. So it has been moving sideways. It's difficult to tell where Coca-Cola can go. We don't like trading companies that don't have a clear trend, because it's just a waste of time for us. Even though the company pays dividends, we prefer to generate our money from capital appreciation rather than sitting with idle capital just because we are receiving dividend from that particular company. So let's see what else is there. Meta. Some people, they love Meta. When they spoke about metaverse, people were so excited about that. Unfortunately, when they missed earnings there, we saw the share price tanking all the way. This is another company that underwent a share split, when the company now is trading in 100 and something US dollars from those big numbers, the thousands. As you can see, we still have this bottom there. Well, I don't know why I'm struggling to draw a straight line, but you can see this bottoming level here. The share price hasn't reached this level. Not to say that the share price must reach this level. It will depend on many factors. If the results are positive, the share price can continue to push further up there, but do keep in mind that there is this overhead resistance around $220 per share. Once it breaks above $220 per share, then we can still see the other overhead resistance, but the main one is somewhere around $300 per share. So we will see how the results are coming from Meta, whether the business is profitable, how much cash they're generating, how much earnings per share they are coming up with, also the sales and the gross margins. So these are some of the companies that we need to pay attention to this coming week. Let's see, we spoke about Roku, to say that people like Roku. Well, I don't know what Roku does, but I can tell from the chart if it's something that I'll be interested in buying. In this case, as you can see, there are some companies that following that COVID break, they went up nicely. You can see here, it seems like the stock formed that double top before it came crashing. It gave in at this support level, and then it is back to that pre-COVID levels, which is about $88 per share. So from the current share price, just because the stock has fallen by this much doesn't mean that it can't fall any further, but also at the same time, it does not mean that the stock cannot start to recover there. We don't have a position. We wouldn't have a position on a falling stock like this. We like to protect our capital, but then we'll see how the results are coming this week. If maybe positive results are coming, then we can expect the share price of Roku to push up a bit. But if the news are negative or the results are negative, then the share price can still fall. Because, for example, if you look from the previous top there, how much the stock has fallen since topping out somewhere around July 2021. Let's see. since the stock it fell from July 2021, we can see that the stock is down by 81% there, but the stock can still fall from here where it is once again. For example, at the current share price of $88, if it falls by 50% or so, it will go to about $45 per share. So a stock that is on a downward movement can still fall further. We know that it's not something nice to witness, especially if you have a position, but such things happen. Then let's look at Intel. Right, we see it's Intel Corporation there. Then again, you can see the stock has been on a downward movement here. It has been falling. Now it's coming here to recover. Well, we're not saying that it's going to recover. What we're just seeing is that if maybe positive result and there are buyers, they can maybe push the share price up. Otherwise, if they fail, the share price can go lower, depending on how you feel about semiconductors and Intel Corporation as a company. At this moment, we don't have a position. We don't see a reason to have a position here. Whenever we buy stock, it's okay to miss some companies. There's no need to own everything, right? We mentioned that we have a MAC position that we took recently. The stock has been erratic. We tried to buy this breakout level, then the stock it pushed downwards. So if the results are negative, you can see the candle is big there. If the result from MAC are negative, then we can expect MAC to continue to push downwards. But if the results are positive, maybe MAC can come back to this breakout level and maybe even push above this level. But there are plenty of stocks that are in the healthcare sector that are setting up positively. If MAC comes up with a positive result, maybe that positivity of the sector can help to boost this share price, but we can only respond once we see the result coming in there. And then lastly, maybe let's look at Altria. We mentioned that it's a tobacco company. So some people are buying it because as a defense stocks, like we said, the share price was pushing higher when the market, remember that somewhere around November 2021, that is when the market has been starting to be weak, and then you can see that the share price it pushed up there. Then just somewhere around May or so, it topped somewhere there. Then it has been crashing down there. It has nothing to do with the nicotine business. Maybe it's just some of these stocks are cyclical, meaning that there are times where they act as defense stocks. If another sector, maybe let's say for example a tech sector, is performing better, then investors start to dump these consumer defensive stocks in response for those into buying those growth stocks. So we see these companies coming back at this level. So we're not interested in buying these stocks. It doesn't matter how the result they come. Even if the stock push all the way back to 58, we do have better companies in our portfolio than to try and chase these hard pennies. But also remember that we have this overhead resistance, so the stock can actually push up here at 44 and then it rejects that prices and then it comes back to crash. Whatever happens there, it's your money. Just make sure that you act according to your expectation and to what you see from this company. And then just lastly, maybe let's look at S&P 500. We saw that the share price or S&P 500 in general, the recent week it tried to push up there. We're still positive that if more S&P 500 companies are recovering, then we can see the S&P 500 pushing further up there. We don't have a position on S&P 500 or the SPY ETF where we have a position. We have a position on Nasdaq, because if you look at a Nasdaq composite, it's the same story with S&P 500. We're looking at this level, and then last week the share price or the price of Nasdaq, it broke above this level. In the recent video that we uploaded, we mentioned that we have a position on this QQQ ETF which track that Nasdaq composite. The ETF at this moment is still moving in our direction. We're still in a profitable position there, but that profit could be short-lived, especially if more and more Nasdaq companies they become weaker. But this is our support level here. If the share price come back and break below this level, then we won't hesitate. We'll just cut our loss there, because if the market is falling, then it can continue to fall further. We don't want to sit with the stock hoping that something is going to change. If there's no change in sight, it's better better to protect our capital, so that whenever the market starts to become positive again, we have free cash to buy those companies. All right, so that's it for today. I think I've said enough. Just keep in mind that these are the earnings that are coming this week, and there are a lot of companies there that you can expect some result. Just look at the companies that you own in your portfolio, and then look at the chart and see where you want to place maybe new orders, want to take position in those companies. We mentioned that we are interested in Apple because we have a position in Apple. We no longer have position in energy stocks. They have been weak. We're not saying that they are going to continue to stay weak, and it will also depend on the price of oil. We saw that last week oil was weak. I mentioned that we no longer have a position on oil, so this is the level that we are keeping an eye to see if oil managed to stay above $100 per barrel. Maybe it can still push all the way up to that previous high of somewhere around $125 per barrel. But this is bad news for us drivers, because that it means the fuel price is going to continue to be expensive. Otherwise, the share price can push below this level, below $100 per barrel. So if it pushes below $100 per barrel, then depending on the South African rand US dollar exchange, we might expect a decent price slash there in terms of fuel price. But we are just hoping for any positive news in terms of the oil price. Remember, the price of oil, one of the companies that can be affected by the price of oil is Sasol, but we're not going to cover the chart of Sasol today. That's it for today. If you found this video useful, please consider subscribing if you haven't subscribed, and if you haven't liked this video, we would appreciate if you can smash that like button. So that's it for today. We will see you in the next video.